Tom Bowley, Chief Market Strategist here at Earnings Beats. Hey, good morning, everybody, and welcome to this Wednesday, April 24th, 2024 edition of Trading Places Live. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes or so as we take a look at the action from yesterday, take a look at a couple of the obstacles that lie ahead, certainly take a look at some of the earnings reports that have come out. Lots of charts to talk about, and we'll get into all that in just a couple minutes. We did have the durable goods report out this morning for March. That was better than expected, although when you strip out transports, it was not a very good report. And that may be, some of the reason why we've seen transport struggle, of course, over the course of 2024, especially since trying to make a breakout not that long ago. We'll take a look at that transport chart in just a minute. Do want to make a couple of quick announcements before we get started here. Just want to, again, make sure Earnings Beats members know I am actually heading out of town on vacation later today, probably just around noon. And as a result, there'll be no Trading Places Live on Thursday. We are going to have our live trading room that starts at 10 a.m. this morning, but it'll be an abbreviated version. I'll go through, probably spend most of the time answering individual questions. As far as the rest of the week, daily market reports I won't be around for, but John Hopkins will send out abbreviated market reports each day, just discussing what's going on. And of course, I'll be looking at the market from a distance, mostly out on the golf course. Anyhow, if I see anything that really stands out to me, I'll certainly pass it along to John, and he'll pass it along in the reports. But just wanted to make sure everyone is aware. Our weekend reports, just depends what time I get back on Sunday. I do plan to work when I get back, but I just don't know how much time I'll have. So as far as the weekly portfolio report, the weekly market report, the weekly market video recap of what took place in the prior week, the Fab Five, all of that, I'm just not sure. We'll just see what kind of time I have when I get back, but I'll try to do what I can. Anyway, just want to make sure everybody is aware of that. All right, let's go ahead and take a look at the at what happened yesterday. So we had another really good day in the market. Of course, we were beaten down. If it is, maybe something like an ABC correction, this could be potentially a B move back to the upside. I'm not 100% convinced that the selling is over. I do believe longer term we're going higher. I just think the short term is a little dicey. It's a little bit harder to predict. We do have some big earnings reports coming out later this week, especially Thursday after the close. I think we're going to see, I think Meta might be out tonight. I have to go back and check that out. But I think Amazon, Google, and Microsoft, I believe, all report Thursday after the bell. So that's going to be a big day. And all three of those companies, by the way, on a relative basis, look pretty solid. So I'm expecting those reports to be pretty good. Maybe if we do pull back over these next couple of days, we'll see what happens. But maybe those three companies on Thursday evening can really start to jumpstart things again back to the upside, get through some key moving averages and so forth. Anyhow, let's take a look at what happened yesterday. The Dow Jones Industrial Average finished up 264 points. That was a little bit more than 2/3 of 1%. If I zero in here, kind of see that the Dow did get back through the 20-day moving average barely. We'll see if that can hold. A reversing candle right here. If we do get a little bit of a gap up, and by the way, let me give you those futures while I'm thinking about it. The diamonds, which track the Dow Jones, currently down 0.2 of 1%. So I don't know, maybe we'll be back down around that 20-day at the open. The S&P 500, the spider, is up 0.05, or 0.5 of a tenth of a percent. So very small there. The QQQ, which was doing best of all, currently is up about 0.5 of 1%. Got a really good report out of Texas Instruments last night, or at least a really good reaction. And that's helped to lift the semiconductors this morning, which in turn is helping the QQQ. But the small cap IWM went right up to its 20-day moving average. I'll show you that chart in just a second. down 0.4% today. So again, we got to continue this push and get through some key moving averages before it starts to look a little bit more, I don't know if repaired is the right word, because we still got a long way to go to get back to the recent highs. But at least that would be the first step in the right direction, would be getting back above 20-day moving averages across the board. And that's going to be a struggle, especially with the 10-year Treasury yield this morning up. I saw it was up earlier anyway. Yeah, I've got it up right now about 0.4%, back to 464. Of course, yesterday it was dropping, and as it was dropping, we saw some of the more aggressive areas of the market perform pretty well. Small cap Russell 2000, the IWM, came roaring back after a weak start relative to the other indices. Maybe that happens again today with the Russell down more than the other indices. We'll see. There has been intraday rotation, quite a bit of it, toward the IWM or the Russell 2000 small caps as of probably the last couple months. We actually moved to probably right around a 6-month relative high, the IWM versus the QQQ. If we only look at the intraday action, forget about the gaps, because I think that's where we get a lot of manipulation. Markets gapping up, markets gapping down. I like to see what happens during the day, which is why that AD line is one of my favorite indicators, because it ignores the gaps. It only looks at how you finish relative to where you traded that day. And so anyhow, we'll see how that continues here in the next couple of days, couple of weeks, as we really kick into earnings season. Anyhow, right there, you can see that Dow Jones getting through the 20-day, but seeing futures down just a bit now this morning. S&P 500 has a little bit of room to get up to those moving averages. Not quite there yet. Maybe we see a little bit more strength. It was nice to see a second day back up above 5,000. I still think that's a pretty good psychological level. Went below it one day, and then the bulls came right back, and we've been able to get above it. But can we extend for a third day and get through these moving averages? That's going to be a big test. That's usually the first thing I look for. When we're in a downtrend and price action's going down, we get that 20-day crossing below the 50. That's a death cross. When you see that first move back up will tell us a lot. If we go up, we fail at that 20-day, we may have some additional weakness ahead. If we go right back up, maybe even consolidate just under it, but then eventually break through without some sort of a big reversing candle, then I think things are looking much better. Although, again, you still got room, to get back to the all-time highs. But that would be the first step, get back above those moving averages. So the S&P gaining almost 60 points yesterday, more than 1%, actually about 1.2%. That was a really good start. The NASDAQ 100, again, nice reversal, but look how far below the 20-day. We're seeing a little bit of relative strength, but prior to that, we were seeing a lot of relative weakness. So today, with the gap up, are we able to extend it and actually get back up to that 20-day and then get through? The interesting part on the NASDAQ 100 is that if you look at all these lows coming across here, really right at about the 17.8 level is right. It was support as the NDX chopped sideways for about 6-8 weeks. Once we broke down, that was on a pretty big red-filled candle there. That was a pretty nasty breakdown. Just shortly after that, we had the death cross, continued moving lower, and now as we move back up, we've got the 20-day moving average, which is at 17,755. That's almost 300 points above where we are right now, which would be probably about 1.7, 1.8%. But if we get back up there, that's going to be a test of price resistance and the declining 20-day moving average. So short term, we've got a little room to the upside, but I'm going to be watching closely to see if we can get enough, muster up enough strength to get back through those key moving averages, especially that 20-day. Usually in a downtrend, that does not happen. Normally you go up, you test it, and you fail. Or even sometimes you don't even get all the way up to test it before you break back down again. That would be a more significant sign of a sell-off, in my opinion, is to go back down and take out these recent lows, because that would start to look more like an A, a B on the rally, and then a possible C, which would go down and take out that prior A low. So that's kind of what we're up against. I mean, we're not out of the woods. Been a couple nice days, but certainly not out of the woods in the near term. Mid caps rising 36 points. That was a little bit more than 1.25. You can see that test of the 20, which saw the death cross after the big breakdown. Again, most of these charts are lining up very similarly. Can we get through? Russell 2000 up 1.2%. 3 nice days in a row, but look at where the high was. The high was up at about 199.5, and you can see that 20-day moving average 199.43. So we got up there, we tested it, we backed off of it, and we're seeing futures are down a little bit. Transport, same deal. And transports, look at this triple bottom here at 15.4. This was the 15.2 to 15.225 area where we had some support. We went through, we lost it. We got back through that level, which is a good start. But I think this triple bottom, along with this declining 20-day, it's going to take some work for the transports to get back up through that 20-day. If they do, I think that's a really good sign, or at least a good step in the right direction. But we got some work to get there. All right, let's move on to the sectors. Yesterday, communication services. By the way, 10 of the 11 sectors were higher yesterday, after all 11 were higher on Monday. So we've seen some nice participation in this move back to the upside, but can we clear some key levels? Communication services got back through its 50-day, and we have not seen a death cross here yet. Communication services has shown some nice relative strength, certainly compared to technology, which I'll go over in just a second. But on the bounce yesterday on the XLC, we closed at 80.79. The 20-day is 80.82, 3 pennies below, probably looking to gap up based on what's going on in the NASDAQ this morning in the futures. But can we hold it? I mean, if we gap up and then you see a big red candle today, not a good looking candle. Again, that would start to paint the picture of maybe just nothing more than a test of 20-day moving average and rolling back over. Technology, a little bit deeper than that. We saw a lot of selling taking place at technology. Many stocks hit very, very hard over the course of the last week or two in this area. The rebound's nice, but you can see, just like the NASDAQ, a lot of room to go just to get back up to the 20-day moving average. Again, until we see what happens on Friday morning, after we get reports from Microsoft, Amazon, and Alphabet or Google, I don't know. I need to see those three. I think if those three come out and post some good numbers, then I think we have a much better shot, perhaps, to get back through that 20-day, assuming the reaction is strong. That's another thing. When we started off earnings season this quarter, we did so with those banks, those big banks. And if you remember, they all came out with really good numbers, and we saw a big sell-off. They're coming back. Some of them have broken back out again, which is great. But again, the initial reaction to these earnings reports they're not set in stone. Just because you have a good report doesn't necessarily mean you're going to have a good reaction. A lot of these companies ran a great deal from October all the way through recent highs. And so I think the market is now in this show me phase. It's like, okay, we expected some good numbers. We're getting it. But what lies ahead? If interest rates remain higher for longer, is that going to have an impact on some of these companies' earnings? And that may be what's going on right here, and maybe factoring in some of that. But anyway, technology's got a lot of work to do. Materials, this is a group that I said I didn't really like. Energy materials. You can see the materials as it was setting the most recent high. Can't really see it here, but the PPO, trust me on this one, rolling over. Negative divergence. We've now reset the PPO. We've gone down to that 50-day. Do we hold? Well, last couple of days we haven't. Normally with a rising dollar, and the dollar has been moving higher for the most part, with a rising dollar, the XLE, which tracks energy, the XLB, which tracks materials, they tend to underperform. They don't just tend to, they have underperformed. So dollar still remains pretty strong, although it did struggle a little bit yesterday. If that dollar remains in an uptrend, I just don't think this is where you're going to see your outperformance. Short term, yeah, no problem. But pull up a long-term chart of the XLB or the XLE relative to the S&P 500. So do something like XLB : SPY and take a long-term look at that, and then compare it to what the dollar has done. Compare it over the last 20 years. And you'll see that since 2011, 2012. Yes, materials will get a pop once in a while, so will energy. But overall, the long-term trend, while the dollar's been rising, that long-term relative trend continues to go lower. Recreational services, that was the best performing group. And nearly every industry group was up yesterday. I mean, there were some that were down, obviously, in the materials area. I think steel was one. I can't remember if that was yesterday or Monday. I get everything confused. I'm looking at so many charts every day. But I know steel was having a rough time. But you get outside of materials, and we had a lot of charts looking similar to recreational services. Maybe not breaking above moving averages like this one did, but this was one of the best performing areas of the market yesterday. Recreational services getting back through both moving averages. But I would say this stock is not trending, or this index has not been trending. If you look over the past 4 months that are shown here, how many times have we gone above the moving averages, below, above, back to test, back above, back below? Whoops, accidental hit of the button there. And then back up above again. This is the definition of a trendless market. Look at the 20, below the 50, above the 50, back down to the 50. We don't have any kind of an extended trend in play here. And so I don't really care about these moves through the moving average because this isn't a group that's been trending to the upside. Moving on to the aerospace group, this one is holding its 20-day and a big bounce and close to breaking out again. So you definitely have some relative strength going on here in the aerospace area. Home construction, big pop yesterday. Some of that may have had to do with the 10-year Treasury yield, I think, dropping 5 basis points. But now we're going up. We're testing that 20-day, which is crossed below the 50. And today, yields are up 4 basis points. So it's going to be interesting to see what kind of reaction we get in home construction today. But if the yields remain up, I would expect that we're going to roll over here and fail at this 20-day moving average. But obviously, we'll know more later today. All right, that's just a quick update on what happened yesterday. 10-year Treasury yield, again, as I mentioned, durable goods out earlier this morning, was a strong report, but we revised February's report down. And then also, if we strip out transports, it wasn't so great. So 10-year Treasury yield, let me just give you a quick update here. 464. So what we gave away yesterday in the yield, got it right back today. So again, areas like home construction, going to be very interesting to see, if they keep moving up and they break out. To me, it's a sign that we're not expecting the 10-year Treasury yield to go any higher, or maybe we're expecting a quick reversal back to the downside. But I look for those different types of signals to help me decide what I think is going to happen with the 10-year Treasury yield. Right now, there's no doubt we've made the measurement 4.66%. That was from that cup and handle back in March. We also know that we've got this overhead gap resistance on the yield at about 470. So the measurement of 466 up to this gap resistance at 470, and look at where we are struggling right now. Every time we get up to mid 460s, up to 470, we reverse back down. But right now we're sitting in a bull flag. I mean, this isn't going back down. I mean, it looked like a couple of times we were going to roll back over. Now we're kind of, coming back up again. If we break through 470, I don't think the market's going to handle it well. And we've got right now, right up against some key moving averages across many of the indices, sectors, and so forth, industry groups that we talked about. And then, like I said at the beginning of the show, I don't think we're out of the woods yet on this short-term pullback. I said I thought it'd be 4 or 5%. I thought it was going to happen in March. Happens a month later. We're in that 4 or 5% area right now. We're probably on the NASDAQ. We may have gone down maybe close to 7 before rallying back up. But let's watch these recent lows and see if they hold. If we do get a little bit more selling, do we hold those? Do we go down? If we go down, we're probably going to be looking at a positive divergence on the hourly chart. Never mind. Yesterday's strength took us all the way back up to the 50 hour. So at this point, doesn't matter if we go back down lower because we've already got the reset. Momentum starts all over again. That's the way I use the PPO or the MACD. Any of these momentum indicators, when you get back to the center line, there's no momentum. I mean, that's the definition of a center line test. You've got your short-term moving average and your long-term moving average, and they're equal. I mean, if they're equal, and the PPO is sitting at 0, If you had a problem with momentum slowing prior, it's wiped out when you get to zero, when you get to that zero line. So now the market's free to go wherever it wants. And do we reverse off that 50-hour back to the downside, or can we make this breakout on the NDX? At the open, we're probably going to be up testing it. Maybe we go through it, but can we hold it? I think that's going to be a really, really big question for this market. So let's take a look at the S&P 500. There you can see the move down, rallying back, 20-day moving average. I don't really have a whole lot more to say. I mean, when you break down price, volume, that combination is the most important indicator. And so when we trend, when we're below the 20-day and the 20-day is below the 50-day on a daily chart, that's telling you you've got some short-term issues. Now, if we go out to the weekly chart on the S&P 500, this is a beautiful test of the 20-week moving average. So we've got long-term that looks pretty good. Of course, this candle is not complete yet. And we could have, if we finish week later this week and we go back down to a new low, I'm not saying we're going to do it. I think I wouldn't say we're 50-50, but we're probably pretty close to 50-50 which way we go here. The weekly chart is turning right where we've talked about. I mean, if you go back and you look, here was one little breach on the weekly chart. We came right back up and through it. If you're looking maybe at long-term swing trading or something like that, as long as we don't lose the 20-day or that 20-week moving average on Friday, you could stick with the S&P 500. Even if technology is weak, we've got areas like financials that are really performing well on a relative basis that could continue to hold the S&P above that 20-week moving average until we get some strength coming back into those other areas. So the weekly chart to me looks much, much more bullish than the daily chart. But again, so far this bounce, it's intra-week. That's only through Tuesday. Where does this candle finish by Friday? Could be that we have an intraday or intra-week move higher and a close below the 50-week, or excuse me, below the 20-week, which at that point, I think, continues to maybe keep this downtrend in play. So something to be thinking about. I mean, I know there are a lot of charts and some say one thing, some say the other. When you put them all together, sometimes they line up really nicely. Sometimes it's just mass confusion. Right now in the short term, I think it's kind of like mass confusion. Last couple of days rebound great, but probably the biggest test still ahead on most of these indices. NASDAQ 100, let's go back to that daily chart there. So here was the breakdown, trying to get back up. And I was looking down here at 17, and it looks like that was the breakout in January above that December high, right at about 17,000. So, and that was the first time we've tested this level since breaking through 17,000. So this could be the level where we simply stop. Maybe we go up, test the 20-day, come back down, maybe a retest, a double bottom, and then we break out. Maybe it's not an ABC. But again, price action is what's going to tell us all this as we go further and further down the road. It'll give us more clues as to what kind of a decline this is. Small caps failed at that 20-day moving average. Again, we've got futures, which I'll give you a quick rundown again, where we are right now. Diamonds, we got about 7 minutes to go. Diamonds down 0.1%. Spiders up 0.1%. QQQ up about 0.6%. So we have seen a little bit of improvement since I went over the futures a little bit ago. Russell 2000 is still down a little bit more than 0.4%. So it looks like bifurcated action at the opening bell. If you recall, that's what we had yesterday. Small caps were down at the open. The other three, I think, were up. And by the end of the day, or certainly throughout the middle of the day anyway, small caps absolutely surged past both the Dow, or all three of the Dow, S&P, and the NASDAQ. And a lot of it occurred when we had a big drop in the 10-year Treasury yield. And I'll show you what I'm talking about here. If we look at an intraday 5-day chart, look at that 10-year Treasury yield dropping. And that was about 9:40 to about 10 o'clock, actually maybe a little past 10 o'clock. So that half hour right there. And if you look at the IWM in that half hour, this is yesterday right here. So look at what IWM did. during that period. That's where it got almost all of its strength, was from that drop in the 10-year Treasury yield. Today, the 10-year Treasury yield's back down, or excuse me, back up. And the yield back up again, makes sense that we're going to start off with the IWM down, or at least on a relative basis, trading lower on a percentage basis than the other key indices. So I don't know what's going to happen. I think if we see that 10-year Treasury yield get through 465 and start making another run toward 570, I suspect the IWM is going to lose some of this strength that it has seen, that's gotten it back to the 20-day. So watch the 10-year Treasury yield, watch the VIX. We haven't even talked about the VIX yet, but look at the VIX. I mean, we were up 19 and a quarter here. We got up to 1950 or something prior to that. Look at this drop in the VIX. We're all the way back down into the 15s now. 17 to 20 is kind of that, which way is it going to go range. But we didn't break out above 20. That's what I said I was holding onto my ETFs, as long as that stayed above or stayed below 20, as long as the VIX stayed below 20, because I know historically what can happen to the market with a VIX above 20. It could be a quick 5-10% additional selling. So you've got to kind of keep an eye on the VIX as well. So in other words, you got to have like eyes all, in the back of your head everywhere, checking out a lot of different charts. Transports, big breakdown there, coming back up, looking a little bit like the IWM, essentially testing the 20-day. This triple bottom right here that we broke below, we're kind of testing that with that falling 20. The PPO is well below the center line. This is a big test. So do the transports get a breakout or not? Moving on to the chart of the day. First, I want to just invite everyone out there, if you haven't already tried our service, we'd love to have you. Free 30-day trial. Come on in, join us in our live trading room. Starts at 10 a.m. this morning. Again, it's going to be a little bit of abbreviated today. Members will tell you, we set it up originally to be maybe about a 45-minute trading room. But members can tell you, I tend, as you all know, to talk a little bit. I love talking about this stuff. I love analyzing. I love learning about the market. And I love passing it along and educating. But today will be cut off after 30 minutes because I have no choice. I got to get ready for my trip. But anyway, come on in. I'm sure we'll have some interesting questions that come up during the live trading room that I'll be going over. We'll be looking at charts and stocks and potential trading opportunities as well. From an individual standpoint, for the most part, I'm going to lay pretty low just because this bounce, we're now that we've bounced, we got some work to do to decide whether or not whether we've truly seen the bottom, or maybe if we're going to go back down, retest it again one more time. Also here on our page, if you don't know much about us, maybe this is the first time tuning in, certainly appreciate you tuning in, everyone. But if you scroll down, you'll have an area where you can sign up with your name and email address and get our free Earnings Beats Digest newsletter. I can tell you, recently we've been talking about some companies and how they're set up going into earnings. And we talked about American Express last week in one of our articles, I said I thought American Express could be one of the best financial companies going into its earnings report. And they blew their numbers away, gapped up, and broke out. Stock, I think, was up close to 10%, maybe 8% or something the day with earnings. And then I did a similar thing with the industrials. And I think that was out on Monday morning. That was the Monday EB Digest, talking about General Electric and how good it looked going into earnings. Yesterday morning, GE reported, again, big beat on bottom line. Stock gapped out, up, and broke out again. And I think that one was up 6 or 7%. So it matters looking at relative strength and, just seeing how a stock's traded into the end of the prior quarter, because at that point, you go into what's called a quiet period. Once you reach the end of the quarter, until the announcement of earnings, Wall Street can't send in analysts. That's a quiet period. They cannot talk to management. That is a law, SEC provided. Now, does it happen? I hope not. But that is law. You go through this quiet period. You're not allowed to talk until the report comes out. So sometimes these companies look really good at the end of their quarter, And then during the quiet period, you'll see them kind of back off a little bit. And then the earnings come out and the earnings are great. You get the big gap up. That's essentially what happened with American Express. Anyway, the EB Digest this morning, I wanted to show you this, is end phase. And what I wanted to do was to show you what the other side looks like. In other words, end phase reported last night after the bell, and it was not actually, I still haven't seen the earnings and revenues to see whether or not they beat it all. I can tell you their reaction was not good. Let's see, we're going to be open. Actually, we are now open. Let me see if end phase has opened. We'll pull it up over here too. Well, it's actually showing up. It was down $10 last night, last time I looked. Anyway, it is up. Maybe they had some decent news. Maybe, the other thing is you can be in a downtrend or an uptrend and you get new fundamental information. And if it's not exactly what Wall Street was expecting, we could see character changes on the chart. So, I mean, maybe end phase takes off and maybe it'll be the start of a new uptrend. But going into this report, I would not have felt very strong about the stock. And this is why. AD line moving down. You had price action for the most part. It's been trending lower. I mean, if we pulled up, we could go back, a couple years further. And you can see the stock's been under a lot of pressure, couple big gap downs, rally, but now it's like we're consolidating, really not sure which way we're going to go. This is probably, well, clearly the stock's oversold. I mean, we were $340 and we went down into the 70s. So we lost about 80% of the value. But is it warranted? We got to bounce. I think if the stock could get back through 140, I think that potentially would be the first sign of an uptrend in play. And you think, well, it's at 114, I'm not going to wait till 140. Well, you might get caught in this whipsaw. I mean, maybe you go up for a while, maybe you get in and it goes to 140, you can get out and see if it breaks through. But you also could see it back down in the 70s. So for me, it's just a do nothing kind of a trade. When I've got this AD line that's continuing to go down and has been for a year and a half, and I've got relative strength, which has been going down near a 52-week low. The group has started to show a little bit of relative strength, but end phase really hasn't been phased by it. No pun intended there. But let's see where it goes. Right now, again, in the opening belt, looks pretty good. We'll see where it ends up. Already back down now, $2.50. So a lot of volatility. But pre-market, it was down, I want to say like around 104. Maybe it goes back down there. I don't know. You can see the volatility though in the stock. That is about it. Last night we did an earnings webinar, and I went through and talked about, I think, 22 stocks that have reported earnings so far in this quarter that really look good to me. Of course, the first one was Delta Airlines in this nice little cup. We'll see whether or not maybe we're going to pull back here and put in a little handle. But I'll tell you, one of them that I talked about, of course, was American Express. Remember how I said at the end of the quarter, it was moving higher, looked really good. And then after the quiet period, it pulled back. Then the earnings come out and just absolutely takes off to the upside. So anyway, American Express, one of those 22 companies that I really like. If you want to see all the companies, not only did I give you the 22 earnings that came out that I really like, I went over those charts, but I also talked about 30 30 companies that are going to be reporting earnings this week over the balance of the week. And those are also in this video I wanted to show you. It's kind of under the radar. We don't really promote it, but it was a free event to the public. And so usually what we do is after we do a free event, we post it on YouTube. So if you go over to YouTube, it's a Q1 earnings sneak preview. So you can just type that into the search box, pull it up. But if you look, we've time-stamped every stock. So if any of these stocks are ones that you're interested in, I mean, here's Meta, ServiceNow, Lam Research, Chipotle, Microsoft, Google, Amazon, Intel, KLA Corp, ExxonMobil. Moving back up here, Boeing, said Meta, IBM. Here was Tesla. We actually had already seen the results yesterday on Tesla, and Tesla actually was having a big reaction. as was Texas Instruments. Let's take a look maybe at those last two charts. So we'll do TXN. Did gap up above this resistance, pulled back, now starting to rally again. Tesla was up $20. This is what I was kind of afraid of, what I talked about in that video, is I think this 160 area is pretty tough. We gapped up, looked good at the open. Be careful. It would be great if we continue to strengthen later in the day. But with this downtrend in play, I always worry about these big gaps. We'll see whether or not we can hold it. Quick look at what the market is doing here as we open. Dow down 29, S&P up 9, NASDAQ up 100. Small caps and mid caps looks like down and up. So definitely bifurcated action. VIX right now up 1577, so that's up 0.08, not much. But watch the 10-year Treasury yield, watch the VIX, and then watch these growth areas. You know, can they get back up through these moving averages? Clearly, before we can ever even talk about getting back to all-time highs, you got to get above the 20-day moving average first. So that's our first step. Anyway, that's it. Come join me in the live trading room. That'll start in about 25 minutes or so, 24 minutes. 30-day free trial is all it takes. So love to have you. And for those of you that will be there, I'll see you in about 25 minutes. Again, no more Trading Places live until next Tuesday. So have a great rest of your week. Enjoy your weekend. Hopefully it's relaxing for you. And I will see you next week. Happy trading.